Take a look at Bitcoin. The cryptocurrency fell under 55,000 for the first time since February after Mt. Gox said it began making repayments about a decade after it collapsed into bankruptcy. Joining us now is Katie Stockton, Fairlead Strategies founder and managing partner, also a CNBC and NBC pro contributor. I don't think we've ever started with Bitcoin when we have.
Not recently, at least.
But I don't think it's necessarily starting with the tail in the dog. I mean, there are times when Bitcoin can actually be an indicator of what to expect in the NASDAQ or just the risk-on trade.
Yeah. Correlations have been pretty high, too, recently with the NASDAQ 100 and Bitcoin. And then you start to think about them all as these risk assets, right, more broadly. But, of course, the NASDAQ just keeps going and going and going, and Bitcoin has broken some support. So the 60,000 level is what we were watching. And it's not a major support level, but it resolves a trading range to the downside that suggests that we'll see more corrective price action. Next support for Bitcoin is roughly 51,500. So still some downside from here, but still within a long-term uptrend. We're big believers of just having a small percentage of a portfolio in Bitcoin, almost regardless of the price action. We still want the long-term trend on our side, but almost as a call option to take advantage of the upside long term.
You think 51 doesn't hold? You think the 40s is,
Well, that would suggest there's something structural sort of amiss for Bitcoin from a technical perspective. It would jeopardize that long-term uptrend to some degree. We would expect that we see oversold conditions return close to that level, though.
So the S&P and the NASDAQ are so NVIDIA heavy.
It's really wild.
Is that not troubling yet? It's still not troubling?
NVIDIA has consolidated recently.
Yeah, and yet now,
go ahead, look at Apple, look at Meta, look at Tesla last week. Yeah. These are short-term breakouts, and they've driven a short-term breakout from what we call a flag pattern. Flag patterns do show positive short-term momentum. The hard part is, of course, it suggests that we're still going to see more of this narrow leadership. It's not especially narrow breadth, it's the leadership. So you're not getting outperformance anywhere else outside of these mega caps, really.
Why aren't any of these underlying things troubling for the bull, the state of the bull?
I've stopped relying on negative divergences to get bearish because they do resolve ultimately, and they would show maybe a less healthy tape, but that doesn't mean it can't sustain an uptrend. Our thought is that for the second half of this year, we'll see more volatility. The uptrend will maintain itself, but we'll see more corrective phases. And ideally, we'll see that breadth kick in. Some of the cyclical sectors will finally show some relative performance.
Do you factor in money on the sidelines for your work? Or
just more anecdotally. We don't measure it ourselves. We have conversations, of course, with our clients about it. We sense that there is still that, right? So we have people that want to put money to work, but the frustrations are running very, very high with the narrow, concentrated leadership. So people don't know what to do with that. I feel like there's a lot of opportunities out there. The overbought conditions are not that widespread considering how the major indices look. So you can look farther than the large cap technology sector and find some really interesting technical setups, even in now the commodity-related stocks, which have had a pretty good phase of underperformance of late. But now with energy, if you look at crude oil, it seems like it's pushing out of a long-term triangle formation. It might be worth revisiting some of those stocks. Even some of the materials stocks, copper started to show some signs of downside exhaustion, too.
Just the NASDAQ just blows me. Do you remember when we built?
Yes, we built the new building in Inglewood Cliffs.
We spent lots of money
Fort
on that.
Lee, and it was supposed to be the NASDAQ.
We called it the NASDAQ. We called it the NASDAQ 5000 building because we were at 3,000 or 2,500 on the NASDAQ, and like we built it at the top. And it was the NASDAQ.
Look at the
NASDAQ is at 18. The NASDAQ's at 18,000.
Isn't that wild? Yeah, it's really remarkable. We can arrive at from these flag patterns pretty impressive upside targets. That all said, for the S&P 500, I don't remember the number for the NASDAQ, but it's about 57, 55. Which, listen, we want to be on the right side of these trends, whether it's narrow or not, and the market is telling us it can still go higher.
Yeah, and the pandemic wasn't that long ago. I still got mass lying around, like in my glove box.
I find some
Yeah,
too.
time to talk.
I found an old bag that had them. I was like, what?
The S&P, I still got my tests. The S&P was 2,300.
Isn't that wild?
2,300.
It feels like
and hell was
history.
coming, according to some people.